Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the day's schedule events for Tuesday, March 1st. Well, there's a lot of important information out today, but some of the most important, the Chinese PMIs and the Reserve Bank of Australia decision, are out already. The Chinese PMIs were surprisingly weak all around, but a cut in the bank's required reserve ratio outweighed that. The RBA held steady as everyone had expected. Now, here in Europe, we start off at 8:55 GMT with the German unemployment data for February and the final German manufacturing PMI for the same month. The unemployment rate is expected to stay steady at 6.2%, with the number of unemployment claims continuing to fall. Now, continued low unemployment in Germany would probably be somewhat supportive for the euro. The final German manufacturing PMI for February will be released at the same time. As always, the forecast is the same as the preliminary figure. Then, a few minutes later, the EU final manufacturing PMI for February comes out. With that one, too, the market forecast is the same as the preliminary index, so the only thing to watch is any revisions. Half an hour later, at 9:30 GMT, the UK manufacturing PMI for February comes out. Now, the UK manufacturing PMI has gyrated mostly between 51.5 and 53.5 since August of 2014. The forecast for February is within the 52 range as well, so it shouldn't cause any major change in sterling unless there's a big surprise. At 13:30 GMT, the North American indicators start coming out with Canada's fourth quarter GDP. It's expected to decelerate notably from the third quarter rate. The quarterly figure isn't as much of a surprise for Canada as it is for most other countries, since Canada announces monthly GDP figures and they've been pretty weak. In any case, the market's looking ahead for Canada, not behind. Estimates for first quarter GDP are much better. Moreover, the upcoming budget to be released on the 22nd of March may change people's estimates of future Canadian growth. Net, I don't think this indicator will have that much of an effect on the Canadian dollar, unless it's a big outlier. At 14:45 GMT, 14:45 GMT, market releases its final U.S. manufacturing PMI for February, and 15 minutes later, the Institute of Supply Management releases its manufacturing PMI, the ISM index. The question is whether the market index will be revised down towards the ISM index, which would be negative for the dollar, or whether the ISM index will continue to move up towards the market index, which would be positive. That's what's expected from the market. The impact of the ISM seems to be stronger, and therefore I would think that what happens with that indicator is likely to dominate. Finally, we have the Super Tuesday U.S. presidential primaries and caucuses. It's the biggest single day for the U.S. presidential primaries, with 22 states and 1 territory participating. Polls close in most states around 0 GMT or 1 GMT Wednesday. Now, Trump and Clinton are favored to win. The most important point for the FX market is the performance of Democratic candidate Sanders. If he has a strong showing that challenges Clinton, then the market will have to start discounting a Trump versus Sanders scenario, which would probably be negative for the dollar. On the other hand, a strong showing by Clinton that pretty much clinches her candidacy might be positive for the dollar, as it's expected that she would beat Trump. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.